Hey investors, happy Friday. Welcome to KAM's video chart of the day. And today we're going to be talking about Tesla and its meteoric rise. So here's a 3-year chart, and I'm going to take this out to even a 5-year chart of Tesla. And honestly, it's remained pretty flat in spite of some of the movement up. It remained pretty flat until very recently, where we saw this huge rise up to over 1,400 per share. And if I want to look at the growth of this, Tesla's up 477% in over a 5-year period. But in over a 1-year period, it's up 500 and almost 50%. So that means those 4 years prior, it was actually negative. So all your growth has come in this little bit of time right here. And the question of the day is it going to go up from here, or is it going to come down? And so let's take a look at this in some context of some other automakers, because some really amazing events happened. So I'm going to look at, instead of price, we're going to put market cap on top of here. And so basically what we're looking at is Tesla's stock price and Tesla's market cap. And we're going to look at this from an absolute basis. So here's the price and here's the market cap. $275 billion market cap. So let's take down the price, because you can see they follow each other pretty closely. So here is just the market cap. Now if I add Toyota Motor, and I'm going to change this. Here's a 5-year chart. I think I'll keep it. Toyota Motor was trading along at around $180 billion, $200 billion. It's 172. And now Tesla's overtaken that quite a bit at 275. But if I also add in General Motors and Ford, Tesla with the $275 billion market cap is worth more than Toyota, GM, and Ford combined. That's an amazing number. So why is that? Now I'm really kind of curious about this from a revenue standpoint, because you had a huge meteoric rise in the market capitalization. So let's look at the revenues. And this chart looks pretty convoluted, so I'm going to break these things out. So here is the market cap of Toyota, and Tesla recently zoomed by it. I mean, for the longest time, Tesla's market cap was in the $50 billion range. $50 billion. So a quarter of that of Toyota. And just recently, it flew by Toyota. Now, you'd see Toyota had a higher market cap than General Motors and Ford because the revenues were higher, and that makes a lot of sense. Here's GM and Ford fighting it out. Here's GM and Ford fighting it out on a revenue line, and Toyota is the clear-cut winner there. And all down here is Tesla. The revenues were a fraction of those of GM and Ford, and yet the market cap was kind of in the same ballpark. Now we're looking at the revenue of $24 billion, which is 1/10 of that of Toyota's, but yet the market cap is flying by Toyota. So what's really going on here? Well, I'm going to remove this market cap chart, and we're just going to focus on revenues. And it still seems like it's a pretty flat line. Toyota, we've got a little growth upwards. And then from General Motors and Ford, we look pretty flat. And you might see a little bit of growth out of Tesla. But when we change this to a percentage growth, this is what we see. Toyota slightly up, as we saw. General Motors and Ford, pretty flat. But Tesla's growth over the last 5 years, their top line sales growth is up 500%. And if you recall, the price was up roughly 500%. So if I throw the price back onto this chart, here we have a price up about 500% and the revenue growth up 500%. So is this just the price catching up, or the revenue growth, or the market, the valuation of Tesla catching up to the growth numbers? Well, I think we have a little bit different story. I'm going to take these revenue numbers off of here a little bit, and let's pull back. Let's concentrate back on Tesla. And here we got Tesla's price. And I'm going to add a PE ratio in here. So Tesla's PE ratio, and we're going to go to a normalized number. And look, they didn't have a PE ratio until about a year ago. So that means they had no E to get a PE. So they just started making money. So they're working from a very low base. But still, if we bust this down into a 1-year chart, you've got Tesla on a meteoric rise. They finally start making money. They come in at a PE up here at a peak of about 200, off from 100, 200, and then they sell off to about a PE of 100 or so. And now they're up over 300 PE. So what's really going on here? You're getting amazing PE expansion because of the growth rate in Tesla. But at the end of the day, you've had long periods of time with Tesla where this is a 10-year price chart. Long periods of time where Tesla did nothing, and then they had a jump up. And then long periods of time, 4 or 5 years, where they did nothing and even sold off a little bit, and then had a humongous price jump. Sold off again here, huge, huge price jump. I could argue that they are a little bit over their skis and ahead of themselves, just as is the rest of the market. So to have a PE ratio in spite of the growth rate, to have a PE ratio of 300, I understand you're getting a call option perhaps on SpaceX and all the technology. But if you're going to buy in here, I would suggest being cautious and not putting everything to work, maybe waiting for a pullback, because a pullback to here, which would be support, wouldn't be unreasonable, or even halfway down from here to there, where you might see a Tesla price in the 1100 range, would not be unreasonable. So if you're really looking to get into Tesla, maybe you wait for that to happen and even sell puts against it to get in while you are waiting for it to hit your price, and you can collect premium in the meantime. Okay, so it's Stuart Cruz looking at Tesla, General Motors, Ford, Toyota, and perhaps what you should do with Tesla if you want to get in. Thanks for tuning in.